All right, I thought this would be a good practice. You know, utilizing a top-down analysis and kind of getting a general idea where you are on the lower time frame, so you could actually take trades, right? So here I'm starting on the 12 month on a random pair, such as the Euro, Japanese yen, using FXCM's data because their data goes quite far back. This is 1972. Nonetheless, we see that things still, use the same concepts for whatever reason. Okay, so let's do some annotations all the way back here. I thought this was quite interesting. We get a gap, we got a breaker, we trade into the back gap plus breaker, then we come down, and I like this as well because we have equal lows here. Okay, pool liquidity, we did not break that. That's super juicy. There's no reason for price to break up through this breaker all the way up after, before even taking the liquidity here. So this is a great target on this time frame. It's a 3,000 plus pips. It's nothing to the left of that, but yeah, I would drag the target down here because it's so close to this low. There's no point. There's still no point for it to come here and then uh, shoot up. All right. We see that we trade down 1982, trade into it, and then green close, but we close down. And then 1983, we blast down, pretty much down, uh, full engulfing candle for the year. So let's just make a bit more annotations. Okay, so we have our PD arrays in the form of the next candle, anticipation, and we have it in the form of also structure as well. So we see a gap here. This would be a refined entry on a higher time frame, but this is the 12 month, so I can't go higher than that. So it is what it is. But we see we trade into here. It's a good target. R2F gap as well, hot diggity, and we trade down. And although there is a discount busy here with this breaker, however, this overall move is stronger and the intended direction is still lower prices. We have nothing to the left, so we don't know. So when you see something like that, great. I mean, there is a trade in there. It goes all the way up here, 1,000 plus pips into this order block, but then we drop lower and lower and lower. Okay, we can move this box here. We come into it and we still respect it and we still move lower, taking out the low. Then here we have a SIBI. What do? We just kind of climb up for a number of years, 6-7 years, come all the way, take out the liquidity here above these intermediate swing high, drop down, and then we move lower. I like this break. I like this order block here because it looks clean. So this is a breakaway gap for this time frame. We trade into it and then down. So breakaway gaps can be traded too down the road, but the whole point is they're not going to be likely traded into in the next few candles. Okay, so we trade into it, we take out the low, but we do not break this low. We've reached the bottom here. We got to reach the bottom sooner or later. Then we start expanding, and then we create this busy as we break above this into this gap. So we trade into this gap, then this premium PD array, premium CB into this discount CB. So prices is bouncing from discount to premium, discount to premium. And swing high and swing low is also a discount or premium PD array. So it breaks a high or low, and then it goes back to internal range liquidity, like a gap breaker, and keeps on its merry way. So let me delete that. Clean this up here. Okay. Move this. Let's see something more relevant. We traded into this multiple times, but we did not close. It closed a little bit below, but it's still respecting this overall gap, right? And let me see here. It's a small gap here. It trades into that, and then it comes down. It takes out this low, but in the end, it's still respecting this higher time frame order flow. Okay, so you can imagine this tiny one, and then we have this big overall one. It's stronger. If we go to let's say a 2-year chart, there may still be a gap there, but there may not be this CB here. So when they on the existing chart, if there's a PD array, then there you go. It's on that chart. The higher time frame is stronger if you can find basically a BC or CB. All right, so 2029, no, 2022 up close, 23 up close, and 24 we're kind of closing like this. All right, my computer's lagging a little bit. I see we took out this high and we got rejected. But this is not much of a liquidity grab in the whole scheme of things, right? How much liquidity could you get here? You're just piercing, it's a little piercing. To me, that's engineering equal highs. So on the highest time frame, I think we also have this, this possibly being an inversion gap as we get down here, or possible yearly BC as well. Confluence, and we have one down here. And this is a possible draw on liquidity for now, possibly coming a little bit higher, right? But we seem to be respecting this structural order block here. So we may close something like this and trade down. But we want to catch a trade, so let's go down to the lower time frames. All right. So 10-month, we have this order block here, but don't forget we swept this, so we may see a bigger retracement. And we may trade down into here. 9. Okay. Scroll through it quickly. 7, 6. They all have this order block, but we traded up first into a higher time frame or larger liquidity pool, such as this high just by a little bit, and then now we are moving lower. Okay, so that's how breakers get created. You get the up candle, and now this is an order block, but if we trade down, that's suddenly a breaker. Okay, because it took out liquidity here and tapped that a little bit. 5-month, 4-month, 3 months, all block on all these time frames. Okay, this one was here, and you can see here, this one's okay. We can use this over here. It trades down a bit, and then it trades up, and then it trades one more time up and then down. This one's okay to use because it did not reach the higher time frame objective yet. All right, this is relative equal highs and the small swing high here. Swept it a little bit. Now we have the R2F gap here on the 3-month. That could be interesting for a possible continuation up. I like that as a target. So just let me highlight that as another color. Orange, we call it the 3-month orange. Next drawn liquidity, the next area, the next train stop in the whole smart money order flow. Okay, but let's check the lower time frames. Okay, I like this. Yeah, if we can close low, we can close lower. I would like this 2-month. Go to the 1-month. Okay, now this is a bit more relevant. Bit more relevant indeed. Look at this. Okay, we got a CB and a breaker traded consequently, right? On the monthly chart. That's nice. Like R2F gap 2. We shouldn't have to come higher than that. Would we be able to? We check the higher time frames. There's no gap up there. Okay? There's no gap up there to, there's nothing there. So we have this 1 month, we traded down, and we just opened a new month a few days ago. Okay, even more interesting. Trendline liquidity. Okay, so let's see these two trend lines. We had this one, and then one more time, and we moved up. Okay, so I'm just going to take this overall trend line, and I'm just going to incorporate maybe somewhere around here. Not too important, but I think we can come down into where this 3-month here. Okay, this is the order flow, right? Because more candles that print, we transit to a higher time frame. Higher time frame PD array. So if you see price lingering and lingering while you're in a position, check the higher time frames, see what is still there or what has formed. All right, you don't want to be stuck in a trade that's not moving. That can be risky. You may get manipulation and reversal. Okay, and okay, so yeah, in here and then down. Now we can go to the lower time frame. This is where we close. I'm just going to highlight this monthly open then. Okay, let's put it, it's blue. That's the monthly open. It's the monthly order block. This is the monthly CB. Now we go to the 3 weeks. 3 weeks. We still have 15 days for the 3 weeks. So that's, yeah, we just had a 3-week open, I guess. Yeah, roughly. And nothing looks that clear there. We do have a 3-week gap here, by the way, being respected with this breaker. 1, 2, 3. But if you go on the monthly, 2 months, 2 months not there, but the monthly we don't trade it immediately, and we do it on October. Okay, so 3 weeks, 2 weeks. 3 weeks doesn't look too interesting. 2 weeks closes in 8 days. 1 week. All right. Okay, so let's see what we have on the 1 week. We do have a tiny gap here, and it's worth annotating. I'm not saying it's going to go to that, and we may get a gap form here. Okay, which is coupled with this bearish breaker here on this level. We get a smaller one here. I mean, it is possible to trade under to there, but remember what I said about breakaway gaps. This is closing way lower than this. However, it is possible. And so, sometimes you can consider things like news, what news is coming up, how the structure is forming on the lower time frame, and yeah, I guess a couple of other things. But generally, let's see. We still have to go to a lower time frame. So this is a weekly. It's not weekly. It's not a weekly yet, but we still have 2 more days. Today's Thursday. Today and Friday for that close, and then we check that out. But 4 days, 3 days. So we see a gap. Price trades into it and starts lingering. It's not driving down. 1 day, 2 extra days. Then we go to the higher time frame. Make sure we check that the 1 or 2 higher time frames up. I mean, just to point this out. Order block created after the gap. The creation is after this candle. Okay, after Monday. Now Thursday is that formation. We get that, and what else do we get? Equal highs, very clear draw on liquidity. We step up once, 2. This one we linger around for quite a number of, like 2 weeks or so. Then boom, 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 and then we shoot up into this gap. Right, this is 170 pips. 170 pips. This consolidation may not have been that fun. All right, but that's where you have your your stop losses. Okay, it's got to be relative. Usually you get faster moves, but in this case it was a bit slow. You get equal lows. Not really. Actually, is that a gap? Yeah, it actually comes into this tiny minuscule gap, and then on 21st of October, whatever the occasion was, if any, that's when it moved, right? I see one over here. Okay, getting back to this, planning our trade. This was a weekly. Let me refresh my memory. These are weekly gaps now. Nothing here on the 3-day, except for this gap and this one gap up here. 2 days. Okay, so 2-day we have a gap. This gap. So that closes in 18 hours. We actually traded into it already, tiny bit. Go to the daily. Okay, the daily didn't, but you see on the 2-day it did. Let's go to the 12-hour. All right, alrighty then. Show 12-hour. Let's look at this. Nice order block here. Okay, and this is the 2-day gap, but we create equal highs, and there's still this gap up here. Okay, so the structure now like this, equal highs. Remember this blue that blue line was the monthly open. So we're expecting a monthly power 3 kind of thing, which this is on the 12-hour chart. That'd be about 60 candles or so. So we just opened here, right? Came down, lingered around, shopping around, but we do have this nice thing here. It reached up there, but not. Is this a gap? When it's just touching like that, I still consider it kind of relatively like a gap because price still can come down. So let's go to the lower time frames. Remember, that's a 12-hour there. There's a gap within that 12-hour as well. This is a 10-hour. Let's just go down to like the 8. R2F gap down here and a gap here. 7. Okay. Let's annotate this 8-hour first, right? Just so we can see what's going on in there. 4-hour, 1 hour. So just consolidating here. Pretty ugly. Inside here, this is gap. If I'm going to take a trade, probably wait somewhere, put it somewhere in here. Why not take it up here? You can see what it did, right? You had this gap and order block and trade into the gap, and then it's still consolidating and still lingering around there. Let's put on the fib. Okay, when a lot of structure is forming, stuff like that, it's good to wait for price to come down to a discount level. Okay, pretend up here is premium, down here is discount, and of course your OTE all the way down here. But equilibrium would be nice, coming down to equilibrium. We've got this manipulative consolidation. There's no gaps forming here. There's no gaps. Okay, no gaps on this time frame, showing institutional involvement. There's one gap here. Trade down, trade up, trade down, and we're just still kind of lingering around it, bouncing between these two gaps. Although there's no gap on this is a 12-hour maybe, or 8-hour gap, and this is a 1 hour here. It's going back to the 8-hour. Refresh my memory. Okay, so it's completely possible that we go up here, but we want to couple that. We're getting in on this lower time frames. It's good to couple it with those, call it like kill zones, right? If I'm taking a trade Euro Japanese yen, for me it's London. I'm waiting for something on London, and London has its own tendencies. London is really good on say like the first stage of distribution. So after price has like really expanded down, let's say after it's whatever, and then expanded down, and now it's getting drawn into somewhere. There's a big CPI, you get a little lingering thing. Normally that's great for like a London Judas swing, to catch a trade lower. So they all have their different tendencies, and you gain your own experience with them, and whatever asset you're trading, and that's your edge. That is your model that works. Yeah, it's nice to think you can just trade everything, and it is possible, but not everything, but it is possible to trade let's say a lot of things, but your mind has a limit to how much you can keep track of, for one, and number two, how much experience you can get just by diluting um, your time and attention with so many different assets. So I think it's cool. It's cool to be able to be really good at one asset. More assets do not make you more money, because if you're losing, then you're even going in reverse. So yeah, at the end of the day, trading is scalable. If you can do something really well on one asset, that's all you need. You just put on the position sizes, and you're good to go. But you need that data, right? And when you're testing something, you tend not to put your life on the line. If you're developing a new type of seatbelt, you don't strap yourself in and drive 100 kilometers an hour into a brick wall just to try it out. You probably put a dummy. Yeah, I mean, you put a dummy and you test it. How many times? 100, 1,000 times. Is this safe? Does this work? Can it be trusted? And can I feel confident using it? Because if you can't feel confident using something, or like, let's say, a trading strategy, then what's the point? It's not, how long are you going to be uncomfortable using it? And that uncomfortable feeling actually makes it even less likely. That's why people go on losing streaks. Now they're suddenly fearful and they just keep losing and losing, and somehow they're just manifesting this losing. It's an actual thing where people just they blow up their accounts because they can't handle the any sort of drawdown. It's just that uncertainty that is so unnerving and maybe scary for some people that they will just blow their account so they can have that relief, that actual relief. Although you're losing all your money, it's still a relief because now you don't have to worry about it. You don't have to feel like I'm in drawdown. This is stressful. What's my next trade going to be? I'm sitting here waiting for a trade. You're just done. And yeah, it's just a mentality that one should not have, of course. So coming back to this trade, maybe if we come down here and then we can target here because nice equal highs here as well. Okay, I like this. If it doesn't give us the opportunity by coming down here, that's okay. Maybe it starts moving up. That's not the time to chase. Yeah, because it's not a good trade, right? It's all about framing your trade. What is your trade? And the trade should be planned in advance, and then you take that trade. Okay, and you got to wait for it. The market just has, it's like that. It presents you things, and you decide, is that my trade? I think my trade would be somewhere down here. Um, I like this. I mean, it's obvious on 2 hour. 1 hour, you got this gap thing, and it's another one here. 2 hour. This is the first order block inside of this overall 12 hour. Yeah. Okay. Plus this tiny gap. We may or may not go into it. I don't know. I do not trade the Euro Japanese yen, but if I was, I'd probably be doing it, waiting for maybe a London manipulation. Asia is quite applicable, the yen too, but now this is on the hourly time frame. You can see what happens, and if it comes down here 3 o'clock, might be a good move. What else can you do? Confluence. Go look at the DXY. Not so relevant, I guess, because this is a cross pair. But I like the euro dollar, Japanese yen dollar is there. The dollar yen is there. The same things that you're seeing on this chart is the yen wanting to go somewhere. Is there a very clear, strong draw on liquidity? Let's say on the downside, and then euro is kind of maybe has some bullish opportunities or even just consolidating, which could propel price into here. Okay, so then you work your way down the time frames here, right? So it all has to be based on there's only so far you can go down, right? On the 1 hour, we have this kind of ugly consolidation here. You don't have to go in here and look for a trade. It's not nice. Wait for price to move, and then you can trade in that direction because it'll just be risky. Here on the 5 minute, yeah, okay. You get breakers, order blocks, things like that. This became a breaker over here, bullish breaker, but it went down, well, because there's a fair value gap, but um, it hasn't reached the higher time frame objective yet. It's just lingering around here. Look at this, just comes up, down, up, down. This during the New York lunch hour, which I'm not too familiar with, but I mean, look at this. There's some nice equal lows here as well. So we got this expansion, retracement. Okay. And let's say I'm trying to get an entry on a 1 hour candle anticipation or 4 hour, and let's say I'm down to the 5 minute. Okay, now I'm waiting for what happens, right? For example, here this becomes a bullish order block on the 5 minute. I may just get in on the market and have your stop loss, my stop loss here, and then write it up. But in this case, I'd be waiting, for me personally, because you just you just don't know. So that's how it go from top to bottom, and now you just narrow it down, right? What is this trend line down here? Yeah, right. On the monthly, we're bearish. But here we see some potential to take out its equal highs and come into this 3-day, no, daily, and 2-day. Okay, what is it? 12-hour gap up there. Okay, why? Possibly because we have this bullish candle here. I think it would be good to go in there. Although we tapped into a 2-day, 2 days still has 18 hours. And the next 2-day can still come in and still close below. So you just got to work your way down the time frames and see how long we linger. We linger another 4 days. This is still okay. This is still part of this 4-day gap. Still within 3-day gaps a bit higher, so it's still okay. Oh, that is the 3-day. Sorry. The 12-hour gap is still higher, so that's still okay. Then we keep checking, right? If this week closes like this, then we got this whole weekly gap to play with. Would it go all the way up there? All the way up here, it'll have to break through a lot, and it's bearish order flow. So trades up, down, trades to a gap, down. Now we took out this low, so it's time to refuel, engineer some liquidity, then probably down again. Because look at this trend line. This, how many times it's bouncing, and overall in this general area, it's been here many times, and now we displaced down after coming into this monthly. I think that's a monthly, or is it a 3-month? Yeah, monthly R2F, and all based on this, right? If you frame trades like this, then you're good to go, right? You work your way all the way down. If there's nothing clear, then that's okay. Then you do lower time frame trades, and you just don't force it. You just wait for something clean. Eventually something clean will show up, like this. So let's see how this month plays out. I'll put an alert here, and we can always check on it. But most likely it's going to come down. That drop down into this inversion, come up, take out this liquidity. I think something like that. Yeah, that looks good. So yeah, all right. Hope you enjoyed that, and show me what you can do on a different random pair. Try and take FXCM, or pick a pair that's not like completely parabolic in one single direction, like some of the cross pairs are. And yeah, it's up to you. Whatever. Okay. See you.